And 5/16/2019, we are live on YouTube. We've got Coach Tim, Coach Cody, and Coach Mark here for Tackle Trading's halftime report. Walmart earnings, Cisco earnings, markets are moving. There's no doubt about it. 28.91 on the S&P 500. Let's start with Cody. Cody, how are you doing today?
I'm doing fantastic.
Mark, if you had to describe one word on how you're doing, how is your?
Now, I appreciate that.
Okay. So what is the word?
Smug.
Smug. All right. Anyway, Cody, I cut you off. I apologize. You had a thought there. I'm doing well as the markets are.
Oh, bullish retracement, easy trigger. If you want a picture to put in a textbook, you could use that.
Yeah.
What a trigger looks like. And then, 9 out of 10 on picks from the stock report are moving. 10 of 12 on the ops report are moving. Like, our pro members have got to be happy this morning. I know I am.
Trade what you see. Red candle, green candle. The market's giving you information every day as it's developing. We've got a nice green candle here today on some momentum now coming back into some moving averages. We'll get all the breakdown here as we go. Let's start with S&P analysis here, Mark. 2890. You've got some falling MAs, some rising MAs, a flat 200.
No technical analysis out the window right now. Is the trade war done?
It is not done. No.
And if you read the options report, one of the many reasons I feel smug today, and I'm sure by the end of this program, I will list them all. And if you don't like a vain, arrogant man, tune out now, because our pro members on that options report got great guidance this coming week.
Ilka even says, what an options report. Great job, Mark. Hello, halftime crew as well. And by the way, if you're out here and you're watching, Mark did the option report last weekend. And I told him, internally on Sunday, great job on that. I thought it was fantastic. If you have not seen it yet, go and watch it. There's no question about it. The write-up, the content, the video, the picks, fantastic analysis. It's why you pay for a pro membership.
And the picks, let's forget the picks for a second, because everything we do from, in 7 Steps Guide of Trading and every coach at Tackle Trading that's been around a while will talk about this, is that you start at the top. You start at your market analysis, what's going on. Sometimes nothing's going on, and you can stick straight to the charts. Be like, this is the trend. I don't got really anything big going on. But that's not the case heading into this week. That's not been the case for 2 weeks now. We have this big macro. It's not even the elephant in the room. It's the elephant. What would be the analogy of the elephant in the room that everyone's talking about?
The bull in the china shop.
That's right. It's the bull in the china. Everyone knows it's here. Everyone knows what's moving the market back and forth, and it's the trade war.
Yeah.
In the options report, we talked about what happened last year when the trade war was the bull in the china shop. The trade war's been around.
The China shop was a metaphor for someone who's just destroying everything.
Everything, all the time.
And the trade war does that because it destroys both setups. How many people got caught in a bearish setup that didn't wait for confirmation on Monday?
Yeah.
How many people did that? We talked in the options report about the market having a bullish bias. We talk about these wide ranges where trades can get stopped out. It's almost like you have to do the opposite of whatever the news of the day is on the trade war. And we've talked about this on the Trading Justice podcast. We've talked about this on coaches shows. We've talked about this in the Traders Lounge, is that because there is so many players involved in this trade war. You have administration officials, you have the president, you have other countries, that there is such a constant flow of information that there's this constant spin. There's a negative headline over here, and you don't know when the next positive one is going to come, but you know it's coming, because that's been what this entire history of the trade war has been. It has been one constant string of information flow, where you have a negative headline, a positive headline, a negative headline, a positive headline. And then, like last year, at some point, it no longer becomes the bull in the china shop. It becomes the elephant in the room. For 7-8 months, it was the elephant in the room. It was the trade war's there, but we're going to ignore it. We're going to focus on the Fed. We're going to focus on earnings. We're going to focus on economic data. And they push it to the sideline. But while it is the primary storyline in the market, as long as the trade war is the primary storyline in the market, there is always a chance that another negative headline pops out of anywhere, or another positive headline pops out of anywhere. It is absolutely a mess for directional traders. It's great for day traders. How great of time have day traders had this week?
Oh, day trading's been fantastic. I mean, there's
just like it was last March through early April, when it was the bull in the China shop, day traders cleaned up. We talked about this in the lounge back then. For you longtime Traders Lounge attendees, remember, what was it, 14 months ago? We talked great day trading environment, great time to throw some puts on stocks you might own because the volatility is high. Great time for individuals that have certain theta strategies. Terrible for directional traders. Now we'll see how this time plays out. And if this truly is a bullish retracement, which, how do you count on that when the bull is still in the China shop? Could be.
You can't 100% count on it. We've also now moved through earnings season. If you count back the last 5 trading days, Mark, 3 red, 2 red, I would say, and the 3 green, obviously on Friday, 6 trading days I should count here. But a lot of the price action, we're actually right where we were last Thursday. From last Thursday's halftime report until now, the price is basically the same as where it is. The instant reaction to the news bringing it down, then the rally off the news bringing it up. You need a break 2,900 on the S&P to confirm more upside movement. Now, there's a lot of beautiful setups, and the momentum is now completely in the bull's favor, and we're going to break a lot of that action down. But let's not get too worked up until 2,900 is violated.
And I would argue that ignore all of those numbers altogether. You have to have, when there is all right, technical analysis is something I truly, genuinely believe in. And anyone that's listened to me ever coach knows the next thing I'm going to ask. What is the kryptonite to technical analysis? It is volatility. What creates volatility? It is news. What creates more and unexpected, unknown when it occurs news than any storyline that you've ever seen? Have you ever seen another storyline that creates the constant string of news that the trade war does?
Well, I mean, for Forex markets, Brexit has been that way for 3 years. But for stock market,
Brexit.
Yeah, stock markets, it's been that trade war now for about, 18 months? We started back February. It's been 15, 16 months. So it's been that for quite some time now. The trade war going back and forth, positive resolution became the elephant in the room. Then the bull in the China shop. Love those analogies. It's been a while since we've had a storyline like that. The Fed raising interest rates in the fall was much more deep in terms of fundamental impact.
Did you know when those were going to occur? Did you know when Jerome Powell, has there ever been a speech that Jerome Powell gave that you didn't know exactly when he was going to give it? Does he just show up at Starbucks and start talking and off the cuff start, giving, Q&A to reporters?
Or no, but wouldn't that be a fun day?
Oh, I would love it, but it's never going to happen because they're methodical. They're planned. You know when they're going to speak. You know when events are. And so there is this time for not only you, but the market itself to anticipate and then digest without knowing that, hey, Jerome Powell's going to speak again tomorrow or 2 days from now, or he's going to tweet something like, take it back. I'm feeling a little hawkish today. Like, the trade war is not like that.
No, it's different. Completely different.
Something could be happening right now. And it creates a lot of frustration for directional traders.
Well, and you have more than one party involved here also. You have China and the U.S., not just the Federal Reserve trying to set message and tone from the Fed policy statement type of stuff. So, yeah, I agree with you. I understand that. Let's break down some charts here as we go.
One last thing. This White House is very, very market savvy.
Yes, they are.
They are very, very market savvy.
Market aware and market conscious as well. I mean, they definitely understand the stock market. They understand the role of the stock market. They pay attention to it. I would agree with that. Yep.
I mean, and so they know, at least they know that the market is easily manipulatable. And so when you have these swings down, Is it a surprise that you've heard constructive things the last couple of days, that those headlines have been a certain way?
Yeah, but when does the market give up on that garbage? I mean, boy,
it doesn't. It won't.
The market rides the short bus every day to school. The market is the dumbest creature in the world. It is a crack addict that is just looking for its fix on any given day. Like, so
many metaphors there. Oh,
yeah, I love it. We're shot. That's right. That's right. Give me Cisco, if you would. We'll talk more as we go. I mean, there's a lot of companies, implicated by this. Not just the S&P 500. The NASDAQ actually rallying even bigger here today. Cisco, one of the biggest companies in the NASDAQ, on the Dow Jones Industrial, over $200 billion in valuation mark. Deep pullback, now rallying very, very nicely on their earnings. Cisco's pop is impressive. And there's not a lot of companies that have earnings at this time of year. How do you read or interpret that kind of reaction?
That's a beautiful chart. Everyone should put that high on their bull watch list for however, because we all have different triggers. Mm-hmm. Some people like more conservative triggers. Some people like more aggressive triggers. That type of environment where a stock sells off and then has a positive catalyst going against the very short-term price action, that's a really nice setup. So like, however you trade, that is likely to produce something really, really pretty, and likely to be something that's pretty decent, barring the market holding up. So yeah, that's a pretty chart.
Yeah, I would agree with that. Another earnings stock, NTES, Cody, if you would.
You said ETES?
NetEase, NTES, NetEase Inc. Software and services. Tech has been strong for a while now, Mark, gapping out. A little bit different on the chart. 280 was a little bit of a shoulder, but obviously you got to like the strength here, up 6.5%. Earnings was a beat, and their conference call actually created a little bit more momentum going through. A little different than the chart on Cisco. Explain that.
I mean, you didn't have, okay, I mean, you look at it, it's messier. I mean, I know that is not a technical term, but it is a term oftentimes used. You have really pretty charts, and then you have charts that just aren't as aesthetically pleasing. Go back to Cisco.
Mm-hmm.
Well,
that does soothe the heart and mind. It's
yeah, I mean, when you look at Cisco and look at just the price action from the start of the year, like just zero in from, January, whatever day this, party got started for 2019. And you look now, ask yourself out there, just a qualitative question. Is that a pretty chart? It's very clear, nice uptrend, start to sell off. It's just aesthetically pleasing to the eye.
Yeah.
Now, we could discuss the specific technicals about why it's nice, but nice steady uptrend, price sell off the last few weeks that has coincided with the market volatility itself, and now you have a market catalyst. Now go back to NetEase. Now let's just zero in from the start of the year. Different type
my
of
blood pressure just rose a little bit.
Different type of chart. It's not that there isn't something here, but like I can't play every stock out there. I can't just throw at everything. And this is one of the great advantages I have and you have and Cody has, and every person watching this either live or on replay, and give us a like if you would. We love those likes. It makes us feel good. It allows us to sleep at night when we see that our individuals are participating and appreciating the information we share. But when we look at this, I can't play everything. And so I get to be greedy. I don't have to play charts that aren't pretty. I don't have to play setups that aren't really, really, really appealing. And so when I see a chart that hasn't been as bullish in 2019, similar type setup if you just looked at price action over the last 2 weeks. The last 2 weeks, the price action has been about the same. Little move back, gap up on a thing. So there's a lot of similarities, but when I examine price action for the year, one chart is really pretty, One chart I have to think way too much about. And if you have to think way too much about a chart, move on to another chart.
I agree. I mean, it's kind of more like a post-volatility play. Now, there are things you can do with it, but you can't trade every stock in the market. As I'm going through my routine, Mark, I always keep a list of bull, bear, neutral, and then I update my watch list on a weekly basis as we go. And your watch list management, I heard you say this a while back. You keep a track of 100 tradable symbols. You know, some come in, some go out, and you probably have other watch lists, but you can't trade all 500 stocks in the S&P 500. You got to limit your exposure at some level and focus on what is in front of you and very, very clear to trade. I love the advice. Let's keep moving through the markets here. Obviously, there's a lot going on with all these movements and all the volatility and whatnot. Performance on the S&P 500. Cisco leads the way at 7% now. It's actually continuing to run. A couple of companies that are grabbing my eye, though. Well, Mosaic off the bottom, but not good. Mohawk off the bottom, not good. Northrop Grumman. Give me NOC. Let's take a look at the knock list. And
I just felt like I entered some government black ops operation. Let's take a look at the knock list.
I do like that. But it's because that show back in, it's still on, I think. I can't remember now. I'm going to have to think about it. It's an incredible show, but they had that thing called the knock list. And Northrop
What show is that? Help us out, because I remember that now.
Isn't it Mission Impossible? Didn't they have a knock list on Mission Impossible?
Is that what it was?
I think so.
The knock list.
I think so. So NOC.
So what's on the list other than NOC?
People to die. So
no, I mean, if we're going to take a look at the knock list.
Well, we would put Lockheed on there probably, and Boeing, and maybe Smith & Wesson Holding Company. You know, in fact,
if you wanted to be really clever, you could just create everything that's in a similar trade setup to knock, whatever that is.
Yeah.
The knock list.
I do like that. I like this idea. We're going to run with it. By the way, the picture of the day, I put it on Tackle Trading's Facebook page, was from one of our halftime crew, Adam Stewart. You had sent that to me months ago about you sitting in a tree stand. I think you were watching for deer and whatnot. And I said, where's everybody's happy place? And that was Adam's happy place out there in Alabama. I thought that was really a cool picture. NOC breaking out, showing strength. Now, you got some funny candles up here, but in general, that's a pretty good looking trend, Mark.
It's got classic signals. It was a lot prettier at the start of the week, but there's some strength there. There's no doubt. You had a hybrid, like zero in on the price action heading into this week.
Mm-hmm.
No, that's this week. So everything before this week. All right, so that's good enough. So heading into this week, we had a very clear resistance area. Now let's fast forward a couple days. At a very clear resistance area. Heading into this week, you started breaking out of that resistance area. Now that short-term uptrend, trade sideways, whether you call it a high base or a consolidation, short-term consolidation pattern, whatever you want to call it, has been the pattern of the year. Stocks that trade up, short-term uptrend, trade sideways, provide you a clear resistance level. When it breaks out of that pattern, whether it occurs in the middle of the chart, at the top of the chart, after a breakout, after an event, that pattern has been the pattern of 2019. It has been insanely profitable for directional traders. Insanely profitable. It is like if you trade one pattern in 2019 and some version of that, you made a lot of money. Now, if you're a theta trader, because we're on Theta Thursday, you've made pennies. Mm-hmm. If you're a directional trader, you've made lots of dollars. That pattern is a directional trader, a delta trader's pattern. Flash signals at the end of the week, flash confirming signals today. It's a really strong pattern. We're seeing really, really heavy movement. Up 3%, almost $10 today. Mm-hmm. It's just really, really strong pattern. And so,
good question.
Knock? I don't know. How's it gone on almost every other stock that's flashed that in 2019? They've killed it.
We have a really good question in the chat from Bill Saunders out there in Ohio. And hey, Bill, always good to see your name in our chat, loyal pro member, loyal halftime crew. He says, I got stopped out yesterday, and then is it too late to get back in? You know, Mark, when you get stopped out on a doji, the market had come down. He probably had a real tight stop on the doji from, I would say, last week, I would guess, on Friday. It just ticked below it, stopped him out. Now here we are. We've heard this question 1,000 times from traders. Can you chase that stock right back into the same trade? I want to get your take, Cody.
Well, I'm going to give advice on what is that yellow line right there?
That is the 9 EMA, I believe.
The 9.
I see. I can only teach how I trade. And if you had a stop loss, you did not take a close below the 9 in conjunction. Because when's the last time not close below the 9? There is a reason for directional traders. I call that, well, it's my favorite indicator. I affectionately call it my girlfriend. And we've been living above that 9 for 3 weeks. Because that 9 has an uncanny ability, because of the amount of high frequency trading systems and perhaps the way exchanges calculate price themselves of holding. Mm-hmm. And so when a stock has strong sentiment, when a stock has a strong pattern, even in the midst of the market volatility this week on Monday. So what was happening to the entire market on Monday?
Down, down, down.
Yep. What did NOC do? How did it respond to my girlfriend on Monday?
Then it hung out, little doji.
My girlfriend slapped it away, said, I don't care that the market's dropping and everyone's panicking. I'm holding. That is a real sign. How NOC responded on Monday. Well, the market is going crazy to the downside. Yeah, NOC gapped down like everything else did. But what happened post-gap? Came down, found support, bounced. Mm-hmm. When people get stopped out in these situations and that 9 EMA holds, the lesson I have is these hard price levels that you use for stops. I use my 9 in conjunction with those hard horizontal levels. Mm-hmm. So I have that hard horizontal. It just is too tight a stop. It's just too tight a stop. I mean, that's happens to traders all the time. Mm-hmm. It's the too tight a stops, and I get it. We want to be conservative, and I would rather a trader have too tight a stop than no stop at all.
You know, Mark, I think a great opportunity here. I don't know who's on the lounge tomorrow, but maybe you could do a few minutes on stop loss theory, you know, and kind of talk about that. I think Bill attends a lot.
Stop loss theory.
Yeah.
You know, I mean, we all know nobody is going to argue at tackle trading that you shouldn't have a stop, because we all believe in that concept of having a trade setup and then having a price where we want to minimize our losses while still having the ability to make money in a trade. Mm-hmm. So we all believe. I mean, can you think of a single coach who doesn't strongly believe in the concept of minimizing our losses?
No, not at all. Either through put options, stop losses, capital allocation, position sizing. There's different ways to do it. But if you're going to be a trader, you have to trade with protection, stop losses, or all of those things in place that we're talking about. There's no doubt about it. NOC running like crazy like there. And by the way, Bill,
the specific question of so Bill's specific question, because I gave a lesson there on stop loss. That wasn't a specific question. Is it too late? Well, we have to find that trigger. We have to find that setup.
I wouldn't do it at 11.
Candlesticks here.
Yeah, 3 hours left in the market day. I would probably wait for tomorrow, no matter what.
That was kind of my thought. My immediate thought to begin with was just what Mark went with, is that when I look at that chart, I'm like, how tight was that stop? Because my stop probably would have been below this high base. So that 1 hour open is probably what stopped you out, and that. I mean, that sucks because then it ran out.
I mean, no, and let's think about this, because this is a really important lesson. So Cody has a stop loss at a logical point. Like, so you have that old resistance level that acts as new support. Mm-hmm. Now, one of the problems with just absolute hard stop levels, like I'm getting out at 292, is that it never takes into account confirmation. So did you ever on the hourly chart here have a candle where it closed below that old resistance level and then confirmed to the downside?
Nope.
So even if you say, Mark, your 9, screw your 9, I hate your 9, I hate that you bring it up 84,000 times a week. So even if you ignore that, just waiting for confirmation of a break of that support level, like having something that protects you from that whipsaw action, which is quite occurrence. Because when price comes down to new support, which it did several times here this week, came down, bounced, back down, bounce. You see the price briefly goes below that, but you have no confirming momentum on the next candlestick. And so you got to give whatever it is, whether it's horizontal support or a moving average or whatever it is, a little bit of breathing room for it to do its job, because that did its job.
Yeah.
You have to give it some breathing room and allow it that.
It's the trampoline. It doesn't hit the trampoline and just stop. It does come down below it.
Yeah, but all those.
Cody, that is a great analogy. Say that again.
I agree with all these things. You can do the tramp analogy. Go ahead, Cody.
Yeah, the tramp analogy is that when it hits that level, it's going to come down. The trampoline doesn't just stop there. It then moves lower.
It moves. I love that, because that's exactly how price action works. Sometimes it does stop on a penny and just bounces up. But sometimes that trampoline has to compress down, and so it goes a little bit lower than its base level before bouncing up. That's a great analogy. I've never heard that before. Did you just make that?
I got that one from Matt, actually, from his
That's a great analogy.
But to answer your original question, is it too late to get in? I would need some type of pullback base. It's now a new setup. I would need a new entry price. I'm not just going to buy because of this action.
It's got great momentum. It does have great momentum. And if you wanted to play a momentum play, that's one thing. But you've got to apply your rules. I mean, here's the thing. The trampoline analogy, the 9 EMA, support, the exact penny, give it some cushion. It doesn't really matter at some level. We've all been one ticked, stopped out, Mark. It does happen.
Yes, we have.
So part of the question is not where do I put it? I mean, a lot of that stuff is amazing in terms of the analysis, and we have to have rules. But it's the emotion of, do I get back into a trade that I just got stopped out of? Now, I'll tell you, if you're a disciplined trader without emotion, you should be willing to do it if it hits your rules. In fact, if your rule tells you to buy, go ahead and buy again. But I've seen this mistake more often than not, Mark. Emotional traders, they're like, oh, I got to hurry and get back in. What happened? And then they're like a paper bag floating in the wind if they're just chasing the price action because they're trying to catch up their losses. That can be a bad mindset, don't you think?
Yes. Just because it might work out on a given trade, the damage it can do to your consistency and your methodical approach to your entry and exit points. We want to be methodical in what we do. We want to be methodical in what we do. And so if we have a clear signal, if we were looking at the chart and we got stopped out and we're like, oh, support did held, and that was a rule and says, oh, if support held, I get back in, then that's one thing. To chase it $11 later, that's fine as long as you have that setup. And I like Cody's two calls, a pullback to a rising moving average or some sort of high base formation where it breaks out of it.
But
I love it. I love it. We got to move on from the knock list. The knock list was long today, which was fine. It was a really good analogy. And hopefully, Bill, that does help you. A lot of answers in there, a lot of detail in there, but I got a lot of charts I want to get through here, guys. By the way, if you're watching our show for the very first time, subscribe to our channel, click the bell, make sure you're alerted when we go live. We go live every day. We post videos all the time. We've got 1,000 videos deep in our old playlist. Go and find something you love and share it with the world. And if you're here watching our halftime report, guys, I need a 50% fib number on the likes here. We've got 31. We've got 70 people here live. Get that number up. In fact, why don't we hit that 60, whatever the number is. I don't believe in Fibonacci's anyway. So 66%, whatever the number is.
I'm going to convert you to the
Fibonacci's believing you though, Tim.
I know
that's right. That's right. They do.
I know they sure do. Anyway, let's move on. Adobe. We're going to rapid fire through some of these guys. You can comment on the one that grabbed you the most at the end here. Adobe's grabbing my eye here. Deep pullback, old resistance, new support, now running. ADBE, if you could, Cody.
Yep. I just couldn't seem to type there for a second.
Software companies, tech companies in his space, Mark, we're seeing some strength. There's no doubt about it. We talked about Knockless, but what about NSC, the railroads? They were hot there for a long time. Norfolk
Software has
Southern.
some of the best setups out there, by the way.
Software is great right now. I went through the heat map and saw a lot of charts there. I would almost guarantee there's going to be a few of those software plays on our scattering reports this weekend. Railroads were hot there for a while. They consolidated. Norfolk Southern is actually up 2.67% today. Colgate Palmolive. CL, brush your teeth, make some money doing it, I guess. Consumer staple companies, Mark, we're getting broad-based leadership in different ways, different types of companies as we go. Tractor Supply, TSCO. Now, this one is beautiful in one regard. If you are a pay range analyst and you believe in the depth of pullbacks affecting future technical analysis, that's old resistance, new support, Mark, in a consolidation. And if you're looking for a trade that maybe you haven't missed, this one's not triggered yet. I think it still has a trigger in front of us above those moving averages. And Citigroup, C, little different. The banks, there's some better leadership in financials, but I do like that old resistance, new support kind of situation. A little bit messier on Citigroup. Capital One Financial is not messy though. COF, deeper pullback, pivot, trigger, confirmation, COF. That is a beautiful setup right there. Now, Mark, out of all the ones we just rapid fired through, which one grabbed your eye the most? And Cody, you can go as well.
They're all decent. They're all decent. I like the software plays as a general rule, just because give me industries that are showing strength across the board. So railroads are showing strength across the industry. Mm-hmm. Software is showing strength across the industry. Financials were showing real strength. So give me areas of the market, not Tractor Supply. I see what you're seeing there, but the other things are closer or generating right now. Mm-hmm. Give me areas that were already strong. So I just don't trust the trade war.
Yeah. Cody, what about you? Which one grabbed your eye?
I'm really liking all the payers. So like Capital One, Citi, PayPal, PayX, Discover. This morning I was, you and I were talking pre-production, Capital One versus Discover. And I mean, they're all looking really, really good.
Yeah.
I'm loving the breakouts, the pullback. It follows the market, even with the trade war. I mean, people are still gonna use these services, PayPal and PayX especially. Those, I mean,
there's all kinds of things to trade in this market. By the way, every market pretty much, but there's a lot of setups. Move on to some bearish picks here. Coach Frank, pay attention on some of these breakdowns. I think you're going to like them. NKTR sitting on a long-term major support at $30. NKTR.
Oh, I thought you were going to start with pass.
Nectar Therapeutics. I mean, 30. A breakdown below moving averages there on weakness would be significant. You've got to have a bear list and a bull list when you're developing in the market. XLNX, semiconductor integrated circuit company, $29 billion in valuation. Not a small company by any stretch. Now breaking below support. Still has a rising 200 in there. There's a few others grabbing. The semiconductor company IPGP. Interesting.
That's a pretty chart.
Yeah, I like that one as well.
Pretty bearish chart.
IPGP. Whenever you see 0.00000001, you probably had the wrong symbol. Is what I would.
That's why I kind of paused. I'm like, I don't think this is a pretty chart.
No.
That's a pretty chart. Walmart, Costco, and Home Depot and Lowe's. Mm-hmm. 0001.
There's a lot of charts on both sides of this market. A lot of the bulls are grabbing everybody's attention today. Just a reminder, there's a bull list and a bear list, and there are all kinds of different companies, Mark. There's still some stocks breaking down. There's no doubt about it. Dow Jones Industrial Average, YM, and with that trade war being the bull in the China shop, I mean, we're seeing bullish now. And you got to trade what you see. But remember, things can change pretty quickly in that marketplace. Dow real quick here, Cody, if you would. And neutral, in my opinion. That's a neutral chart. Now, I don't know what I'm going to rate it yard marker wise, but you've got the weakness out of Boeing, some of the industrials, some of the concern out of some of the retailers and whatnot. You've got strength in McDonald's and other companies on the Dow. We'll get into it. But Mark, just from a very philosophical standpoint, is the Dow now neutral or is it still bullish?
I don't care. All I care about is that in the trade, listen, for me, when the trade war is going on, see, the first time this occurred, I didn't have a playbook.
Mm-hmm.
Like when this occurred last March, April, I didn't have a playbook. I was very candid with people in the traders lounge when that gone on. I was like, I've never been through this before. I have no idea what to expect. I have a playbook now based on the trade war. Mm-hmm. And while we don't have a lot of data, if you want to go long companies not affected by the trade war and go short companies that do a lot of business overseas, that has been a pretty winning strategy, because what you see during the trade war is at the end of it, it seems like we net out at zero. And Tim made reference to this. Hey, we're just where we were last Thursday. But that's not what you see on the charts. You see certain companies up and other companies treading water or down. And there is a strong correlation between these big industrial companies that do business overseas, particularly with China, and everybody else. It's why you saw small caps run very, very well late spring, early summer last year. Mm-hmm. That's why you've seen the Dow at times be a huge laggard compared to other areas of the market.
Yeah, well, it's lagging today. I mean, think about it.
That's because, just think about it. If you're ready to get out there and be a bull, are you excited to go do Boeing? Are you excited to go do Caterpillar? Like, there might be opportunity there, but as a whole, do you think traders are less excited? Or they're like, screw that. I'm going to go find me a nice software company or a small cap or just about anything else.
Well, and let's rapid fire through a few of these Dow stocks. I think it will help make Mark's point a little bit. Walmart had earnings, but they do so much business around the world and they ship so many things from China. Retail store sales were up, but that's not a great chart. It's a dividend payer right now. I like Walmart. I like what they're doing online. I think that they've actually taken, a very big challenge. Most companies did not adapt to the online model very well. Walmart actually has a ton of sales online. So I do like the company and I love the dividend, but that's not exactly an inspiring chart right now. Okay. I look at some other, very bullish charts in the Dow, though. I look at American Express, AXP, Cody. You were asking which credit card company, maybe just the big one right here. You're breaking into new highs above 120. That's incredibly strong. It's been incredibly strong. And Mark, I don't think AXP would be affected necessarily by that trade war. It's consumer spending. It's not going to affect their purchases, do you think?
No, and just look at the chart. You don't have to do great analysis. Once again, go to price action for the year. Like, sometimes we get caught up in this, let's macro analyze everything. Is it a pretty chart? That's a beautiful chart.
That's right. Microsoft, Dow component, but also NASDAQ component. Microsoft, we talked about this the other day. There was the good, the bad, and the ugly. There was the good, the bad, and the ugly in tech names, and Microsoft was a good name. And we saw it. We saw the pullback.
That kind of is like Cisco. Yeah. Like, it has the same characteristics. Nice, easy, identifiable uptrend, catalyst, pullback with the market volatility. Mm-hmm. That's a pretty chart.
Then PG, another bullish one. So Procter & Gamble, we identified the potential breakout. We've talked about it in the halftime report, I think every day this week. High basing, ascending triangle, boom, you should have had your trigger ready. There are some good conservative plays. Now, those are the good, but then you've got probably some that aren't so good. IBM. IBM is still a Dow component, a very big company, tech name, obviously international business machines. IBM, that's not a good looking chart. I wouldn't say it's ugly yet. It's more neutral, but Mark,
if it breaks, go back to if it breaks current support, short-term support.
Yep.
What's holding it up?
Nothing. And nothing. Apple Computer, by the way. I know people love their darling, and so do I. It's one of my favorite companies. It's brought up every week, and we talk about it, all the time because it's one of the biggest companies in the world. That's not a good-looking chart either.
And why is Apple, everyone out there, why is Apple more susceptible to the current situation? Why is Apple lagging the market during the rally this week. Why is Apple? Why? Because they do a lot of sales in China.
Yep.
If you are susceptible, well, but Apple's not, remember, forget logic. If you do business in China, you're not as sexy right now as you were 2 weeks ago when the trade war stopped up.
Not only sales in China, but their factories, their products are built and sourced, and material comes from China, and they're very connected with
that. Is an absolutely A+ point. It's not just sales in China, it is exposure in China. Because listen, once again, this trade war is not over. It's not over till it's over. It's not over till that elephant in the room gets put to the zoo and we don't have to deal with it anymore. Until then, if you have exposure to China and the Chinese aspects of the trade war are front and center, the rallies and the setups are not going to be as sexy. Because once again, I can choose, you can choose, everybody can choose where they put their money in a rally.
Yeah.
Are you going to put your money in something that has exposure to China? Or is smart money maybe slowly moving away? Maybe slowly reducing exposure?
Well, and even some more ugly charts here on the Dow. You've got a mixed Dow. This is why I call it neutral, guys. I look at the individual components as well. Caterpillar, exposure in China. Same theme right here, guys. Not just exposure in China, but exposure globally. This is obviously one of the biggest machine companies in the world. And when people build stuff and you have growing GDP and expanding margins, Mark, people are going to go out and buy equipment and start building more roads and bridges and all that kind of stuff. But if China and US are in the trade war, you don't know. That's not a good looking chart. That is not a good looking chart. Another one here, Intel. Intel taking it on the chin this month. One of the market leaders for a while, now completely just been beaten down. One last one, 3M.
Intel, insane exposure to China. Yep. Like insane exposure to China. Now, I'm a bottom feeder. I'll admit that. I have a lot of different trading styles, but when a big, huge company starts coming down to longer term support levels, I start getting really excited about maybe adding a little bit.
Yeah, Matt asked me the other day, Tim, would you sell a naked put on Intel? And I said maybe in a week or two, but I would.
That's the thing is so let's paint some scenarios. Let's say there really does, and not just rhetoric and not just, hey, we're making some progress, and Mnuchin comes out and says, hey, talks are going really good. And, Trump tweets some bullshit about, hey, China is not so bad. I really like the president. We had chocolate cake once together, and I had 2 pieces. And once you get away from all of this rhetoric, manipulative stuff, and there actually is resolution, there actually is, how do you not love Intel at these levels?
Yeah.
I mean, it's a little scary until that resolution. But if you actually did, this is way high on my list of things to add to not just trade. Like we're talking long-term investment type aspects. I love it when these big, huge companies get pushed down. Because what has it dropped? 25%?
Oh, yeah. No, Intel's a good play at some point when you get some settling in here. There's no question.
Yeah, and I'm talking more of an investing standpoint.
I know. That's where I'm at. Naked put to take delivery. That's what I'm saying. Naked put to take delivery and start that wheel boomerang trade. By the way, I can't let it pass. So they had their cake and ate it too. Is that what you said? Sat down with a couple of pieces of chocolate cake and then they ate it. All right. C'est la vie. But I missed that joke.
No, but from a trading, getting to our broader analysis, why is Intel not rallying? Because once again, these companies with large exposures to China make terrible bullish rally trade things. Are they going up the last couple of days? Yeah. Are things with not as much exposure to China killing it more? Yeah. I mean, just understanding why certain companies are killing it and others are lagging the last 3 days in the rally. I mean, there's almost a 1-to-1 correlation here.
Yeah.
Companies with exposure to China are lagging. Companies without exposure to China are doing much better.
Yeah. Move on to the NASDAQ 100, Cody. Quick look at the NQ contract. We've already talked about a lot of the major names. Outside of the ones we've already hit on Apple and Microsoft and Cisco and Intel, Facebook's looking pretty decent. I think above 190 would be pretty strong. NQ has got better leadership right now than Dow. If you look at the Facebook chart, that's a pretty decent chart, Mark. If you get above that candle from, say, Friday last week, is that a new entry point?
Listen, how many times in the last year have I said trust in Zuck? You know, Facebook makes money.
I was just about to say, you may hate Zuck, you may think he's a terrible person, but he knows how to make money.
And there's been so much BS about Facebook. Facebook is not a company with this ridiculous valuation. Like sometimes we get caught. Like Facebook once upon a time was this huge growth story. Facebook is not this insane value, high valuation company any longer. It's a company that makes money. Mm-hmm. And there's been so much negativity over the last year about people are going to leave Facebook because nobody leaves Facebook. I could hate Facebook all I want, but where else am I going to get pictures of my nephew's soccer games or Tim's daughter's cheer contest? Mm-hmm. We're ingrained. It's part of our life, and Facebook.
And a lot of people associate negative feelings to Facebook based off of posts people are putting on Facebook. But Facebook as a company isn't putting those posts on there. People as a company, they put the advertisers up there, and that's the business model part. And yeah, like Mark, like you were saying, is people aren't going to not want to see their family. They're not going to not want to see their friends just because whatever's in the news, it doesn't matter.
Mm-hmm.
It's going to stay exist.
I'm going to ask both of you the question. Until trade wars resolve, where would you put 100 shares? Because they're both about the same price, Facebook or Apple?
Facebook. Currently, I would do Facebook. It's a better chart, better trend.
And it is setting up for a nice trade setup as well.
Yeah.
I just got to clear that rising 20. It's in a little bit of a weird pattern.
Yeah, no, that's why I think it's got a trigger here. Cody, your line is perfect. I think it's around 190. I'd have to get the exact decimal point and whatnot on the intraday chart, but we'll break that down tomorrow in our halftime report, as well as our scouting meeting, and probably have some setups for this weekend. Let's keep looking through some charts, though. Google, more neutral, had a tremendous rally, guys, but 1200 is very significant. I would kind of move that more into a neutral call right now as I'm watching that chart. As I look at other components on the NASDAQ, there's a lot of really good software companies setting up here today. I'm looking at many. I do want to bring up Match.com, though, MTCH. And, here's the thing. Option report play. We've talked about it. We've identified it. We've had conversations about it. It was on the list, Mark. It had a breakout and a run.
This is why you need to go sign up for a pro membership right now.
Yeah.
All right. Who out here was in the lounge last week when I did my run my mouth? Remember last week? Were you in the lounge last week when I said, all right.
I popped in on. I sat there and listened to you talk about.
And I gave the whole thing like, listen, I don't run my mouth very often. But when I do, I feel really, really good. And I ran my mouth on the Match.com situation. Mm-hmm. What was Match.com doing while the market was selling off on Monday?
Running. Well, it's holding.
Running.
Yeah, holding on a couple of these days.
You need to become a pro member. It literally, you do not like money because every once in a while on that lounge, if you do nothing else but just attend that lounge, every once in a while, I will tell you, this play is insane. That's what I did on Match.com last week. Absolutely ran my mouth how much I absolutely freaking loved this setup. There were so many variables that we don't have time to go into them all. But do you think pro members that attended that lounge, paid for the pro membership for several months on one freaking play on Match.com?
Yeah. Take action. And here's the thing in the chat, guys, everybody out there that is listening to me right now, very, very simple. I want you to write this in the chat. I will take action. See, you have to build your skill sets, no excuses. You've got to show up and put your butt in the seat. And I know that you are there right now watching the halftime report. You are one of these types of traders that are the best, right? Because you're willing to put the time in, the effort in, the energy in, and you've got to show up to these other content things. The halftime report, we break down charts, we go through the markets, we look at the news. But Mark, really the lounge, the shows, the reports, that's where the education, the training comes in.
You out there, I am not smarter than any of you. But my job as a bird dog, I live this.
Yeah.
This is what I do. And evaluating these situations is what I've done my whole adult life. It's not that I am, are you kidding? I couldn't get Facebook Live to work last night. I'm an idiot.
No, we could not.
Ask many women that have went on dates, they will say that guy's not too bright. But one thing I do is evaluate these just like it's the other coaches. And so what we provide our pro members is, hey, we live this stuff. You don't necessarily have the time to live it. And so when we see these opportunities, because Match.com, how much exposure does this company have to the trade war?
None.
I mean, unless you're looking at mail order brides out of China.
I said it the other day. I'll say it again. Sex is recession proof. That's
what I was going to say.
Yes.
How much does Match.com?
What was the Marie said? The bare necessities.
Yeah. You had a situation heading into this week where even with the trade war going on, you have a growth company in a recessionary proof industry, in a industry that is completely isolated from the trade war, that had provided a positive catalyst breaking through resistance on earnings, that is in a hot space, definitely a swipe right space, that was set up in a high basis formation heading into the week. And then on Monday, while the market's selling off, this goes crazy. It's not, listen, when I run my mouth, it's not that I have some great insight. It's just like, hey, everybody, everything. And that's my job as a bird dog for our pro members, is say, it's not that I have some special insight, but boy, this sure does look like a good opportunity.
Yeah, I agree. And by the way, I have to acknowledge Jimbo's statement in the chat here. It's a consumer staple.
It is a consumer staple. I mean, you look at the basic human needs. I mean, we make light of it because it's funny, but you look at the basic needs: companionship, food, water, shelter. Like, have you ever watched that survival show Alone?
Oh yeah, that drives people crazy.
We are social
creatures. We have to have people to talk with, interact with, just on a date.
Very tough.
Even if you're an introvert, you want people.
I mean, they are survivalists. They have all of the skills to survive in the wild, and this show alone puts them out in the wild to see who can last the longest. These people, the physical and emotional pull. We don't like, as a general rule, to be alone. We need companionship, and with divorce rates not going anywhere, this industry is something, and Match's place in it is insane. The trading signal was good. Finding a place to own long-term investing in Match is good. This is a place where I imagine there's going to be a whole bunch of good trading signals on Match for a long time to come. And as there will be on the next stock that catches our eye when somebody runs their mouth to our pro members. And so I hope pro members took advantage. So when you asked me at the start of the show, Tim, how I was feeling, name one word, is smug, because our pro members have gotten a lot of good advice recently.
For sure. And I mean, and our job is to bird dog and to help and give structure, and, they've got to pull the trigger and make the decision. So I'm always going to give them credit. I mean, somebody that can show up, put the time in, use the bird dog advice and apply it. I'm going to high five them every time, Mark, because some people still don't even do that, So if you are taking action, you're out there using the information, kudos to you, halftime crew. There's no doubt about it. Charts that are grabbing my attention, no analysis. I want to rapid fire through them here, Mark. Let's start with Costco breaking into new highs. We've talked about Costco in the past.
I'm going to go
COST.
Oh, excuse me.
Then on the option report in the past, it's now breaking out. You've got earnings coming up. Just be aware of that if you are a Costco trader. Cadence Designs, CDNS, if you will. These are all NASDAQ components that are grabbing my attention.
Costco is going to be at $500 at some point in the next decade.
Yeah.
You know, like, it's a great company. They have a great space. It's all those big box stores. It's impossible to compete. If you don't exist, you already have the market share there.
Yeah.
Like, so
it's a good watch, this stock. I mean, earnings going to throw a question in there. If you're already trading it, just be aware of it. I agree with you, though. I agree. It's a great long-term company. Cadence, beautiful setup, long-term trend. It held up relatively well. Lulu, which has been on our option report for a while now. LULU, yoga pants.
Lots of times.
Yeah, earnings are coming up. Just be aware of it if you're a Lulu trader. Paychex, PAYX.
This is one of the ones I was saying I really like. I mean,
that's an options report play.
I mean, that's also, to Mark's point at the beginning of the show, the beauty of this chart. It's very, very calming, very nice, even with the slowing momentum, high base to a breakout.
Let me read you what I wrote on PayX on this week's. I like stocks that hold their own while the market is selling off and then show real strength as the market rebounds.
Mm-hmm.
This is what I wrote. I like stocks that hold their own when the market's selling off. What has PayX done in the market sell-off? I mean, and then show real strength when the market rebounds.
Well,
that was written on Sunday. What has exactly happened this week? When the market's rebounded, this has shown real strength. There's nothing not to like here. It's great.
I love it. And if you just count the red candle, green candle relationships, Mark, the market had about a 6-day stretch where it was pretty red, and Paychex had only one red candle during that stretch. I think it's great analysis. Synopsis, NSPS here, Cody. Give me a quick peek at it. SNPS, like snaps, kind of without the A. SN, Susan, Nancy, Paul, Susan.
Right. Nancy.
Susan. Today's word of the day is smug Susan. Okay. Smug.
All right. Give me the ticker symbol again.
SNPS. Synopsis.
2 N's.
Start with the letter S, young man.
SNPS.
It better be a good looking chart, I'm going to tell you. And it is. But earnings coming up here pretty soon. You're okay, kid. No big deal. PayPal breaking into a new high. Those credit companies are just amazing right now. I mean, Paychex, PayPal, all of them have been running like crazy. Guys, we're going to have a full report of all these different stocks that are bullish and bearish by tomorrow's close. For our weekend reports, we'll get into more of them as we go. Got to rapid fire through some of the markets here as well, guys. Russell 2000, RTY.
Man, we just had too much fun today. We're already at the clock.
Jeez. Neutral for now.
The rest of the markets, dude, watch Trevor Noah on the Daily Show. He does a segment. Ain't nobody got time for that. Like, we talked about the important stuff. Ain't nobody got time for these dumb small caps till they break out.
Yeah, I agree. Move on to the dollar. Dollar sign DXY. Dollar's holding its own, you know.
Very happy with the dollar. The dollar has, it's playing ball now. Even yesterday, like when I looked at it yesterday, it had broken to the upside and then popped back down from retail data. And then it basically said, you know what? I don't care enough about that retail data. And
until one fundamental things, because you Forex trade, because I'm not really Forex, but I do analyze the dollar because of its importance. But you guys get caught up in some dumbass technical stuff all the time. There is one simple equation on the dollar. As long as the U.S. economy is doing better than the rest of the world, pullbacks on the dollar should be bought because they'll eventually pay off. It is that simple. It is played out for what? How many months in a row now? 6, 7, 8 billion?
Yeah.
Like, as long, the day-to-day price action, because currency market is so liquid and so news, hypersensitive, you're going to have all kinds of intermediate price action. But as long as the U.S. economy stays stronger than the rest of the world, pullbacks in the dollar provide great trading opportunities, just like this week, just like how many umpteen times in the last few months.
I agree. By the way, the Aussie is selling, the pound is selling, the yen is holding. All the analysis we've been doing in those Forex reports is pretty much holding up over the last month or so. That pound, that Brexit situation, pound against the yen has been selling aggressively. Pound against the dollar just broke down. Trade what you see, guys. I love Forex as well as a speculative directional type component for accounts if that's where you're at. Let's move on to energy, crude oil holding for now. Crude light. Mark, I know you watch this product like a hawk, and you're an expert when it comes to crude oil analysis. To me, it's neutral.
One day when I'm like just kick back, all I'll do is trade crude oil futures. Mm-hmm. Like if I could only trade one product, it would be crude oil futures. It has insane volume. It produces beautiful charts, beautiful trends. Technical analysis is at an A+ on the futures charts. I love crude oil.
Mm-hmm.
I love crude oil.
Yeah, me too. And it's holding. It's got to break back above 64 for me to call it tradable one way or the other. To me, I'm neutral until I see a 60 or 64 break on some kind of confirmation. Metals are down, dollars up, markets up, so gold is going to come back down. I talked about the caution, in this as we've talked through the markets through the week, guys. I don't know how to make sense of that chart short-term, Mark.
The one thing people with technical, unless you live gold, and I do live gold. More and more in recent months, I like trading the pure commodity instruments, and I'll write the commodity of this instrument, and I'll talk about, like in the report this coming week, I'm going to talk about why I love trading commodities. Mm-hmm. But you have to throw technical analysis out the window when a trend stops, as far as broader things. Now, intraday stuff works all the time. But one thing you have to realize on gold is that there's a million storylines. Think of it as a Forex pair. Something that's hypersensitive to a lot of things pulling. So when there is a clear trend, hey, great, go with the trend. But when there isn't a clear trend and the chart gets messy, and we've been calling gold messy for a while now, mm-hmm. Basic rules of technical analysis go out the window. And you have to go to fundamental focus on your decisions on gold. It's just a mess right now. It's just a mess until another clear, huge catalyst, like Trump instituting QE4 or firing Powell to, if he were able, let's say Trump gets 8 years, which I think is a really strong possibility. All right. At some point in that 8-year span, do you think he's going to shape that Fed board to a board that he wants? Mm-hmm. Yeah. What's that Fed board going to do on accommodative monetary policy? Mm-hmm. Yeah. He's going to shape. That's going to be a very dovish board. Sending the dollar down when that occurs and serving as a potential huge catalyst for gold. Gold mm-hmm. doesn't have a catalyst right now. It doesn't have a clear, oh my goodness.
No, it doesn't necessarily have that. And by the way, I was even thinking about people who want to buy gold. If they buy gold mining companies, Mark, they'll at least get a dividend. Whereas if you buy the gold directly, you don't even get that. So I think there's complexity here based on the current.
And as a tendency, I tend to gravitate to gold itself. Mm-hmm. But because of that simple fact that you do get a residual dividend and have an extra generation of cash flow, they've done better in the last 3 months than gold itself as a whole.
Yeah, I agree. And I would expect that to be true moving forward until something changes with the US dollar. We don't ever bring this one up, Cody. Bring up /ZT, if you will. I just have to point out a very, very important fact of what has happened in the market. Mark, bond yields are down. The bond market continues to run since the middle of April. In fact, I'm watching the 10-year. This is the 2-year, Treasury note. This 2-year has held a little bit, but it's down 15 basis points now since the 1st of May. You're seeing money moving into bonds and outside of other areas, and the yields are still down. There's this big fear that I've been reading about consistently. Maybe we'll talk about it on a podcast, that the Chinese are going to flood the U.S. market with their bonds that they purchased over the years and maybe potentially bring yields back up, but we're not seeing any of that.
No. Go to soybeans. Since we're looking at random charts we bring up.
What is it, ZS? Mm-hmm.
Like the grains market has gotten killed on trade war news. Broken through support levels. It's acting very like almost perfect correlation. You look at the price action the last 2 weeks and tell me that the only thing impacting the price of soybeans is the trade war. It has a perfect correlation to trade war news, to trade war sentiment. You know, gap down on the announcement of the trade war, sell off, rally the last few days. Now, let's talk about true resolution, like true resolution. Like, hey, we're holding hands. Everything is awesome. We're here together. Trade war over. Where are areas of the market that are going to explode? Like Intel's nice and cute, and you'll make a few dollars. What will those soybean futures do when China announces that they're no longer putting tariffs on grains?
Soy is one of the, well, agriculture in general, but soy especially is one of the largest exports out of the U.S. to China. China imports a lot of soy from the United States.
I don't know if there's anything else I'll trade on the week where we have true resolution, not this, hey, let's manipulate the market with a headline. Soybeans, you may never have traded soybeans. You might not know what a soybean is, but if there is true resolution.
Oh, did Mark freeze?
Yep, we lost Mark.
Okay, it must be lunchtime somewhere, and
if there's true resolution, he was about to and a cliffhanger. No, to finish what Mark's going to say is if we do get a true resolution and the trade tariffs are lifted on either side, this being one of the main products that moves, this should see a nice big pop to the upside because those future contracts will benefit from the resolution of the trade war.
Some earnings tonight after the bell. Cody, got to run through real quick, rapid fire. Mark, Cody, finish your thought here. NVIDIA has earnings tonight. Be aware of it. Baidu, Applied Materials, NVDA, BIDU, AMAT.
You were going way too quick.
Sorry, brother. Earnings. Big Chinese tech here. It's lagged the market not only in the US, but also in China. It has earnings coming up. Chinese exposure. NVIDIA has the same thing. Applied Materials, tackle 25 component here, guys. Earnings tonight as well. Be aware of it. And a couple of really interesting ones that I don't trade very often, but I'm going to tell you right now, I'm going to be watching these ones. Alcon has caught my eye recently as an IPO, long-term care facility, 18 ALC, just an ALC, if you will. Beautiful reaction to the IPO, their very first earnings announcements coming out, $18 billion company in a growth industry as well. Pinterest, who we've talked about, first earnings report after their IPO. Guys, that's important. Always kind of sets the market standard, how they communicate with the market, things like that. I'm interested in this company from a long-term perspective, so I'm going to be watching this one as well. And one last one, one of the big growth ideas out of China from the last couple of years, which has been just beaten up with this trade war, IQ, Internet Information Provider out of China. These small companies without established earnings, they were hurt by that trade war last year. It has earnings tonight as well. Mark, what do we got going at Tackle Trading here tonight, tomorrow, through the weekend?
All right, we have Cash Flow Club tonight for our regular pro members. And then for our pro members, we also have a special Friday night Mind of a Trader. We don't oftentimes have Friday night nightly shows, but we have a special guest on Friday night who does something that when Tim told me about it, I was just like, okay, whatever. When I saw it with my eyes, I was like, wow, that is a methodical, beautiful way to approach your daily routine. Mm-hmm. And tell a little bit about the individual, Tim.
Sure. One of my students who I've mentored over the last couple of years, he's been a member of our community for a long time. His name is Cody Potter. And Cody, if you're watching this on replay, I know you've got probably a little nerves. You've never done this before, but this guy is organized. He is disciplined. He keeps journals. He keeps records. And I think it's kind of like the gold standard of some of the students I've trained.
It's amazing. It literally inspired me to do a better job when I saw it.
And so I invited Cody to do a Mind of a Trader where he just shows you guys how he keeps track of a thing called a daily report card. Write that in the chat. It's called a daily report card. And he's just going to show you how he does it. That's what Mind of a Trader is all about.
He's going to show you how he does it. And that doesn't mean you have to copy him, but I tell you, been around a long time. I got some ideas on how I can improve my daily routine to become more efficient, because God only gives us so much time in the course of a day.
Yeah.
We are blessed with that time, and it is a gift, and it is our job to maximize it. How we spend that time is one thing. I could say, I'm not watching TV. All right, that's going to free up some time. But efficiently maximizing the time we have, that's what we should do in life as a whole.
Yeah.
And Cody's Mind of a Trader, it is just one of those things. It's not this high-level technical jargon. It is just a way to become more efficient in your trading. Absolutely saw benefits for me. I can't see an individual that watches it that wouldn't say, yeah, I can be, it will make you a better trader.
And by the way, one just kind of production note as well. Our shows, what we're kind of trying to evolve a little bit, one step at a time as a company. We've done a lot of incredible things the last couple of years. I'm very proud of our growth. But one thing we're doing in some of our shows, Mark, on Tuesday is we're actually going to teach one Delta strategy. So if you've not watched the Coaches Show replay from Tuesday, go back and watch it, because they're always going to present a short section where they teach the rules to a strategy, and we're going to do that each and every week. If you're a pro member, make sure you're catching those Coaches Shows. And then the Cash Flow Club tonight, which Gino teaches, he's going to teach a theta strategy from one of our playbook rules, Mark, and I don't know which one he's picked, so I won't promote it quite yet, but he'll be there tonight teaching that. So we're doing a lot of great things. I'm excited about it all. Mind of a Trader, our coaches' lounges, go enjoy that pro membership. And I'll tell you, tomorrow there is one stock I forgot to mention, Cody, John Deere. John Deere has earnings tomorrow morning. Dow component, industrial name, and I'm going to have to find a tractor this weekend. Maybe go to a tractor pull here somewhere in Utah. Maybe they still have those. I'm not sure. But Deere tomorrow, we'll be talking about it in the halftime report. Mark, fantastic job today. Guys, if you're still watching this, a like, a share, a comment. If you're watching the replay, say something, in the comments thread. It really helps us. We always like to identify that. Good job, Cody. Good job, Mark. We are done.